Good evening. Today is Tuesday, Technical Tuesday, February the 4th, and the market rebounded nicely today. So looks like it wasn't a dead cat bounce after all. Looks like it was just some quick news, and we're back into a bullish trend. Not bad. First off, so today's Technical Tuesday, I'm going to cover Fibonacci levels and pivot points today. Should be an interesting conversation. Anyone that would like for me to cover anything, please let me know. Just leave a note down below. And please like and subscribe to the channel if you would like me to continue doing this. First off, I am not a financial advisor, so anything I say is for educational purposes only. You need to understand your own risk profile and make your own trading decisions. So let's take a look at the market first before we get into Technical Tuesday. Clicked higher slightly today. So a few more bullish signals. That you notice here the overall lights here, it's still green. So even though we kind of went sideways, went down a little bit, the market really didn't change. The overall trend did not really change. And if I look at the portfolios back here on the portfolio page, and now I've added in the performance of both the primary trend, which is the weekly for the total market indicator, total market index, I should say, and it's still long, and the daily is still long as well. And 41% is what this has returned ever since it went long on November 3rd in 2023. And for the shorter term, this is one that trades in and out, so you don't get the advantage of the long-term capital gains. But you can see it isn't too far off, 38% instead of 41. Right now it's up 2% after the last bullish signal on the 15th. So it's still long. So even with the sell-off that we had, it didn't really change where we're at. If we can look at the weekly total market indicator, you can see right there, it is still above the 21-week moving average. One thing I did notice today, even though it closed right about the same place as yesterday, there are 3 in a row lower lows and lower highs. So even though it's still above the line, it's perhaps beginning a downtrend. So we'll have to keep an eye on that. And even the momentum indicator up here is showing that it's in a downtrend as well. But it hasn't changed anything on this side. And the daily is back above the 21-day. So that's positive. But that could change very quickly. And the volume today wasn't as great as yesterday. So the ADX line is still, the red line is still above the green. So again, it's not convincingly moving back higher. And this could change very quickly depending on earnings. We had a few earnings that I'll look at here in a minute. We had some earnings reported tonight, like Google and AMD. I haven't looked at those yet, so I don't know what they did, but we'll find out here in a minute together. So that's what things look like overall. It hasn't really changed yet, but let's take a look at back here. We'll go back to the market bias matrix, and I'm going to go through this pretty quickly tonight, just because I want to get to the Technical Tuesday portion. So the S&P today, trying to climb back above the 5-day moving average, but still quite a ways from the resistance line and certainly quite a ways from the high. So 60.37, still making headway, but still in the same channel. It's still in this sideways channel. The distribution phase that I talked about before, it is still in that distribution phase. And I mentioned before that it can go down and back up and then back down and then back up. And as long as it stays within this channel, then it's not really breaking out one way or the other. So it needs to break out decisively above 6,100 or below 5850. And right now it is just going sideways. So let's take a look at Bitcoin real quick. See what it did. Bitcoin went down today. So again, this is just a little sideways channel for 3 days in a row. And it actually produced a just about, not technically exactly, but almost a bearish engulfing candle today on Bitcoin. So again, this could bounce up and down in this channel for a little while as well, but it's below the 50-day moving average, and it's below 100 again. So 97,783. We'll see how that looks. The 10-year, let's look at that. 10-year went down. So after trying to make a comeback, it actually opened higher, went up a little bit, and then by the end of the day closed down significantly. Let's go back and look at the 10-minute chart on the S&P. And you can see right here, it went up a little bit today and just went sideways for most of the day. So not too convincing what it has done today. And the dollar, we'll see what the dollar did as well. It's reversing as well. So it's going back down. So everything is like just going back to the way it was before all of the news over the weekend and the tariffs. Now it's basically a nothing burger. So we'll see how that works out. The dashboard, Bitcoin, as I mentioned, down today. Equities just went sideways. They were all up for the end of the day. The NASDAQ 100 down here was up, went up and then went sideways. So all of those are pretty much going sideways. 20-year bond moved up slightly today as well. And then commodities, gold had a nice day today. Gold had actually a really good day. If we look at gold over here on the market timing bias, like look at that for gold, just basically going parabolic now. So if we go back and look at gold over, let's look at 3 years. Look at that, just almost straight up over the last 3-year period. And just in the last month or so, 2 months, just basically going straight up. So what's gold telling us? Who knows? It usually is a flight to safety. You would think that Bitcoin would be as well, but Bitcoin and gold are going the opposite directions right now, which is interesting. Let's take a look at somebody asked me to look at the relative rotation graph, and this is the relative rotation as of today. So this is, everything is moving towards the left-hand quadrant. Healthcare is trying to come out, but all the defensive sectors are continuing to move significantly to the lagging quadrant. And technology is trying to make a comeback, moving up into the leading quadrant. So the aggressive sectors, technology, communication services, and discretionary are all in the leading quadrant rather. And discretionary, though, is starting to make a beeline now down towards weakening. But right now, it's really what we would want to see. We want to see the aggressive in the upper right and the defensive in the lower left. And when these start to move up into the upper right, that's when there's rotation in the market. But I don't really see that right now. So there really isn't much rotation. If we go back to the charts page to my daily routine down here on the lower left-hand side, you can see I looked at this yesterday, and the trend analysis still has not gone below 0 down here for the medium term like it did back in 22. So it's still hanging out in the same channel right there. But interestingly, another chart over here is the risk on, risk off chart, which basically shows you the S&P, junk bonds versus 20-year treasuries. So if the market is buying junk bonds, then that's risk on. That means they are aggressively moving into this and moving away from the safer 20-year treasuries. But right now, that trend is reversing. It's going down. The next level is investment-grade corporate bonds versus the 7 to 10-year treasuries. That one has been reversing too since November. Still above the support line that goes all the way back here to back in the summer. High yield corporate bonds versus the shorter term treasuries, that had been continuing to go up, and now it's coming down slightly, but it might be breaking back higher. We'll see. Growth versus value is still heading lower, and discretionary versus staples still heading lower, but that might be breaking out as well. But overall, it looks like the risk on it's still risk on, but not as convincingly as it was. So it might be perhaps rotating. We'll need to keep watching this. That's why it's part of my daily routine over here. I just like to take a look at these and see what they do each day. The VIX, by the way, went lower. So yesterday I said it went above the 20, but came back into the neutral zone, and it's right near the bottom of the neutral zone, back into the bullish zone pretty soon if it keeps heading that direction. So everything actually looks pretty good in the market um, from a high level view. Now we'll see what happens with earnings, and let's take a look at that real quick. Go up here on my website, breakpointtrading.net. That's where you can find all those charts and all of these things that I've been showing you. The newsletter is on here. My YouTube channel link is right there. And then if you want to check earnings, just click this little button here and it takes you to stock charts. I don't think you need a subscription to do this in stock charts. Not 100% sure. But we'll take a look at the NASDAQ 100 first. And you can see upcoming earnings. Here's AMD after the close, Google after the close. So let's take a look at those two. PayPal is on there, Amgen. What else do we have? These are tomorrow. So first, let's look at Google and see what it did after the close. Went down, so Google must have missed. So down 7, almost 8% after the close today. Let's take a look at AMD and see what it did. AMD down 9%, almost the same as Google. So AMD, it looks like they missed as well. So both of those are probably going to send the at least the NASDAQ, but maybe the whole market might send those lower again tomorrow. So we are continuing to bounce around in that potential distribution phase that I've showed you before. So not a good sign. There were a couple of questions or some stocks that people wanted me to look at. So I'll do that real quick. One is CVX. CVX Chevron Corporation is just going sideways. And in fact, if I look at it on a 1-year chart, that is just a sideways channel. It's right in the middle. If we look at the Keltner channels, you can see it's right reversing to the mean. It's right in the middle of the channel right now. And if we go back, let's go back a full year and look at that. That is clearly a sideways channel. So not too much happening. Let's go back even further, see if there's any difference. Not too much. So if we just look at this and let's draw a couple of lines on this one. Let's do a horizontal line roughly right about here. So you can see right in this range right here, that's the upper channel, and the lower channel is down right roughly in that range right there. You could say it's pretty much in that range. You want a little below it right there, but that is the channel it's been in for 2 years now. So someone asked me for an entry point. The entry point probably would have been this morning, but if you want to get in the middle, it probably will head to the top of the channel. So that's roughly 150. Today is 153. The top of the channel is at 162. So you might get $8 or $9 out of it. So that is what, about 6 or 7% potentially. So it's just bouncing around across this channel for 2 years now. And I don't see any reason why it will probably go out of it. It could even go to the top up here at maybe 163 or 164, somewhere in that range. But that's what CVX looks like. All right, let's now take a look. Let's close this and take a look at the next one, which is CAG. CAG. So this one has been in a downtrend. This is the same chart, same time frame, about a 2-year period. So tried to make a comeback last year. Now it's heading down. It looks like it's sitting right. Let's actually look at this like this. And I'll go 2 years out on this one, and you can see where support is. So support for this ConAgra Brands. This is a defensive stock. Support is basically right down there at about 24.50. It could probably will get there. Looks like it's continuing to go lower. So 24.50 probably will be pretty solid support. So you could take a chance and get in there, or you may, I would wait for it to start to move higher and then get in. However, it's got a lot of work to do. It's got to get above the 50. It has to get above, let me get rid of this. It needs to get above the cloud. It needs to get above the 200-day before it can even hope to get back up here. So a lot of work. Let me draw a trend line. And this is another way to trade as well. You can draw a trend line like that. So that's roughly right about 2650, call it 2650. So I would wait for it to get above 2650 to break this trend line. It might not do that. It might come back up and then go back down and just follow this trend line down. But this will not be in a new uptrend until it at least breaks that trend line, which is roughly right around where the 50-day moving average is as well. You can see the trend line here on the other side. And you can see when it broke that one, that confirmed a downtrend, and it's been continuing that ever since. So that's what I'm seeing on ConAgra. Looks like it would have been a good short right there when it broke that one. It won't, I don't think it will be a good long until it breaks that downtrend line right there. All right, what else? FedEx, FDX. FedEx also heading lower. Don't know if this was earnings or not, but let's do the same thing. Let's draw a trend line. It's pretty clear right there. So pretty much right there. Yesterday broke through that trend line. So it's definitely going to be heading lower, most likely. And we can put a initial support right there. Another one there, another one here. This might be one I'll look at for our Technical Tuesday. But I think the next stop is probably 240 for this. Again, it's a falling knife. It is not buy the dip. You know, there's a fine line between buy the frickin' dip and a falling knife. So I wouldn't be buying this until it definitively moves higher. And in fact, if you, again, trade trend lines, it's got to get back above this. So 265 roughly before this is breaking this downtrend line. This could go back up here and then start lower again. So FedEx looks awful, frankly. The other one is in the same space. Actually, before I do this, let me do transportation index. And you can see the same thing. Transportation index. Anytime that I'm looking at a particular stock, I like to look at the sector or index that it's in. So there's the transportation index. It has not broken the trend line yet, but it also has not broken the downtrend line. So it needs to get above or below one of these to identify a definitive direction. And by the way, on the market bias matrix page, you can see the transportation index. It's right here under indexes. So there's Tran. That's the one I was just looking at. It's right there. So it's sitting right on support, right on the 200-day moving average right now. So having said that, let's look at the next one, which is UPS. Probably will look similar. So there's UPS. Already broke through a major support line. If I go back 3 years on this one, yeah, it's below everything. So UPS is just clearly heading much lower. 5 years. So now we've got a gap right here, going back 5 years. Gap right there. So that's probably where it's headed, probably in the 105 area. And then likely will bounce a little bit, but probably won't go back. So it's got to get through the 50 and the 200, which are way up there. And you can see the downtrend line, the trend line for this whole thing, pretty much like that. So until it gets above 135, it's not going to be defining an uptrend. So you're basically taking a big risk, but it could bounce back from 110 to 130. So that's probably the play if you want to try to get into it. But to confirm a new uptrend, it's got a lot of work to do. So transportation is not looking good, which actually is not good for the overall market as well. That's Dow theory. So as transportation and utilities go, usually the Dow will go as well. And transportation, at least, is not looking very good. All right, so that's it for those. Let me now switch over to Technical Tuesday, and let's talk about Fibonacci retracements. So what are Fibonacci levels? And I actually meant to do this, and I forgot. Fibonacci images. I'll show you what Fibonacci images look like. Fibonacci is found everywhere in nature. So the shape of the human ear is Fibonacci, the shape of a shell, the shape of a rose petal, the shape of a flower, even the shape of a hurricane right here, the shape of a galaxy. These are all Fibonacci levels. So Fibonacci is found. Fibonacci was an Italian scientist who discovered this, and I'll show you how it's calculated. This is called the golden ratio. That's what it looks like right there. And I'll explain how that's calculated here in a minute. But just wanted to point out that Fibonacci is found everywhere in nature. And this is the reason that I use Fibonacci numbers in technical analysis as often as I can. And you can see what they are right here: 3, 5, 8, 13, 21. Does that look familiar? 34. The next one is 55. I use 50 because most everybody in technical analysis uses 50 instead of 55, and it's pretty close to a Fibonacci. But as I've always said, technical analysis works because everyone uses it. So those are the Fibonacci numbers. So now let's talk about Fibonacci retracement levels and how they're used in technical analysis. So the ratios are found in the sequence. Most popular are 61.8 and 38.2. So this is the sequence and how it's calculated. It basically, you start with 0 and 1, and then you add these two numbers together to get the next number. So 1 and 0 is 1. 1 plus 1 is 2. 2 plus 1 is 3. 3 plus 2 is 5, etc. And then just take that out to infinity. So those are the Fibonacci. That's the Fibonacci sequence. And then you divide it by the previous number, gives you the 161 level. Or if you divide by the next highest number, that gives you the 61.8. And if you divide by the second highest level, that gives you the 38.2. So I know that's a lot of math, but that basically is where we get the 61.8 and the 38. 61.8 and 38, or oftentimes called the 62 and the 38 levels. All right, so that's where it's come from. That's where it comes from, just by looking at the next two, the next level and the next two levels gives you those two. So there's one more that if you go 3 places out, you get the 23. And I'll show you where that appears on the chart. You can use it or not use it. Sometimes it's helpful. But those are the key levels using Fibonacci. So Fibonacci retracements are zones. They're alert zones. They are not exact areas. They are not telling you that it's going to reverse when it gets there. They are not telling you that it's going to go through it and go to the next one when it gets there. They're just alerts. And remember that most everybody in technical analysis is using Fibonacci as well, Fibonacci levels, so they're looking at the same levels, and that's why it works. So you can also look at the other side. So this is one that was going up. So this is an advancing. So you start here and you go to the top, the highest level. You start at the lowest level, go to the highest level, and this gives you the retracement levels. So that's where this advance will likely retrace to. You can do it the other way too. You can see if it's going down, then you start the decline at the top, you draw it down to the bottom, and it gives you the levels where it could move up to before continuing its downtrend. So these common ones, as I said, it was 23, 38. 50 is not a Fibonacci, but it's halfway between the two levels. And again, it's what every other technical analysis trader uses. So that is a key level as well. And then the 61.8. Moderate retracements are to the 38 level. So you can use this in conjunction with the other patterns that I talked about. I did patterns on a previous Technical Tuesday, so you can go back and watch that video if you want to. This is a bullish wedge, one of the patterns that I talked about, and you can identify where that bullish wedge will likely reverse by using Fibonacci. In this case, right at the 38 level. Now, again, it's not exact, but somewhere around that level is where it reversed and started going higher. So again, rather than catch a falling knife, wait for the reversal and then get in and capture at least 80% of the move going up. This one down below is a money flow, chicken money flow, which basically just shows you volume and price together. All right, this one down here shows this is a flag pattern, and I covered flags on the pattern video as well. So you can see it went all the way down here and then started moving higher, and you can draw the Fibonacci's right there, and you can see where the flag pattern will probably complete at the 38% level, and that's where it reversed and started to go down. In this case, a flag pattern that is slanted upward usually is bearish. A flag pattern that slants downward usually is bullish. Golden retracements. This is basically using the same thing. So it shows you the retracements. There's a surge through all the levels to the top. So that's the way they're used. And they can be used in different ways. And I'm going to show you how to use it with stock charts here right now. So let's take a look at let's use Bitcoin first. So here's a Bitcoin chart. I'm going to use this chart. This is a 1-year chart of Bitcoin. You can see clearly that it's in an uptrend. So I am going to, and the way to get to the Fibonacci's is you annotate the chart. So click on annotation, and then this little symbol right here shows the Fibonacci retracement levels. So because it's in an uptrend, I'm going to start at the bottom and go to the top. I like to use the bodies of the candles. It's a personal preference, really, but I like to use the bodies rather than the wicks of the candles. You can see there are a lot more of them. And then these are the levels, 38, there's 50, there's 62. Now, I'm going to hold that down. This is a little trick in stock charts. I'm going to hold down the control key, and I'm going to move this slightly. And now you got the 23 level. And isn't that interesting? How all of these retracements retraced almost exactly to the 23 Fibonacci. And this is the sideways channel that it's in right now, right at the 23 level, right at 91.3 or roughly around 92. That's the key level. So we need to watch that. If it drops through that, then the next level down is 82, right down here. And then the 50% level is down here at 75. So we'll see if 75 is a key level. The second thing I like to do, and this is a question that was asked, where do you start and end your Fibonacci retracements? Well, you try to give it the widest range possible. So try to start at the bottom and put it all the way to a recent high. This one was pretty clear with Bitcoin. The next thing I like to do is just to see where some of these levels overlap is I want to draw another level from the high up here. Actually, I'm going to start the one down here, but here's another low right here. So I'm going to do another Fibonacci. And in this case, I'm going to make it red. And this time I'm going to start at this level. and go back to the exact same place I was before. All right, so now what I see are the red Fibonacci's, and look at the one where both of them are the closest, right there at about 75,000. So it looks to me like 75,000 is a very key after the 92.5 level. 75,000 is a very key level. If it breaks through this level up here, and it's not going to do this in a straight line, it will bounce back and forth, probably on these levels and the 200-day moving average. But the 75,000 level looks like a key level for Fibonacci right there. Now, and you can add more of them as well. There aren't any more really clear levels in this particular case. So I'm going to keep that where it's at. And the next thing I'm going to add are pivot points. So let's talk about pivot points. So what are pivot points? They're significant levels on a chart that traders can use to determine directional movement. Time frames. Pivot points are 1, 5, 10, 15-minute charts. You can use them on daily charts. You can use them however you want. This is what they look like, and I'll explain what they are. So pivot points, basically, they do not change, in this case, on a weekly chart, I'm sorry, on a minute chart, 30, 60, 120 minute, they remain fixed for the entire week. But I like to use them on a daily chart. So on a daily chart, they identify the levels from the previous month. So pivot points for June would be based on the high, low, and close for May. That's where it identifies the pivot point, and they remain fixed for the entire month of June. So once you set them, and if you do set them on a chart, then best way is to start at the beginning of the month. New pivot points can be calculated on the first trading day of July. These would be based on the high, low, and close for June. So there you can see the pivot is right down here. So these are the June pivots. It also then will put the May pivot points on here, which are based on the April data. And the April pivot points are based on the March data. So that's what these other lines are. They're the previous month's pivot points. All right. So keep that in mind, and I will put some pivot points on our Bitcoin chart. There are 3 different types of pivots. There's the standard pivot, which is the one that I typically use. And it shows you can actually see it on the chart. There's an R1 and an R2. That's resistance 1 and resistance 2. So that's where major resistance are. Again, it's not an exact number. It's a zone. And then a support 1 and support 2. So the areas to the downside where it might be heading. So I like to use the standard pivot points. This is what it looks like on the chart for the Qs. You can also do Fibonacci pivot points. So in this case, it will use Fibonacci numbers to identify the highs, low, the resistance and support levels. And in this case, it goes out to 3. And then you can also use DeMark pivot points. DeMark is someone that has created some pretty interesting reversal areas on charts. So you can also do that. And just the way to do that, just the way to set it up, you can use them all if you want to, and then pick the one you like the best. The way to set it up in stock charts, this is what it looks like with all of them. I think it's kind of confusing. But the way you set it up is you just do pivot points, standard, put an F in the parameters for Fibonacci, and put a D for DeMark. So that's what pivot points are. And let's take a look at them on our Bitcoin chart. So first, I'm going to use standard. One thing I like about pivots, which I'll show you here in a second. So one thing, first I'll put pivot points on I'm going to take the cloud off of here, just to make it a little bit clearer. So that's what the Fibonacci levels look like for Bitcoin. Now let's take a look at, I'm actually going to put a few extra bars. Let's put 20 bars to give us a little more room on the right. All right, so now let's do pivot points. So right here under overlays, you can see pivot points right here. And I am going to make this color blue. And there are the pivot points. I'm going to actually make the Fibonacci's a little lighter. Okay, so there's the Fibonacci levels, and you can see over here, interestingly, this is the pivot right here. So we're at 97,869. The pivot, remember, is based on last month. So last month's pivot was at about 100. The first resistance is right up here at about 111. And then the next resistance is at 120. So it also shows you the previous months. And then if we go down to support, the first support, interestingly, is almost exactly on the 23 level, which is exactly where this thing has been bouncing. And now you can probably understand why. That if every other professional trader out there uses Fibonacci and pivot points, then it's clear where support is for this. So that is major support right there. And the next support level is down here at about right close to the 50% level. So that's at about 80,000. And then there's not another one for this, but last month there was a pivot point down here near 75. So that's where the pivot points are using the standard pivot points. Now let's look at it again. It might get a little messy on the chart, but let's take a look at pivot points for Fibonacci and see what they look like. I'm going to make this one. I'll make it pink. All right, so there's the pink ones. Now we see for Fibonacci, our pivot is right up here, also at 100, the same place as the standard. The resistance, though, look where resistance is for the Fibonacci pivot points, right where it continually reverses, right at about 107, 108,000. The next resistance is at 112.5, and then it goes up to 120. So this is clearly a very strong major resistance level right there. Pivot is at 100, and look where support is. Support down here at roughly 92.5. It's almost exactly where the standard pivot is, and almost exactly where the 23% Fibonacci level is. And I didn't do this ahead of time, by the way. I just now created this, so I had no idea what it was going to show. So then we've got another support level here at about 87.5, and another support level down here at about 80,000. So we've got some pretty clear support at 80 as well, and then 75 is the final one, I think. But now you can understand why it's bouncing between these two levels for such a long time. Once it breaks out of one of these, it's going to move quite a bit. But that's the reason it's bouncing between these levels, because it's clear that it's bouncing between Fibonacci's and pivot points. So let's look at FedEx, what I showed before. We'll look at the same kind of chart on a one-year basis. Now, this one's going to be a little more interesting because we got so many ups and downs in this particular chart. But let's I'm going to take the cloud off, and I'm going to add some extra space. And first I'll do Fibonacci. Oops, Fibonacci is annotation, Fibonacci, and I'm going to do it from here up to the top. In this case, it's red. All right, so there's my first Fibonacci level. And then I'm going to do another one in blue. This time I'm going to use this level and go up to this level. And I can do one more, make it green, and I'll use this level and go up to this level right here as well. All right, so now what we see is where most of these cross is at 280, the 270 area, so that right through this area where all this congestion is happening. So it's broken through that level. It went down to the 62. It broke through that one. That's from this high right here. Broke through that one. Broke through this 62 and went all the way down to the 100% level for the green one. But it's probably heading down to the 240, 242 level right down here where this one is. That's where I would say it's probably headed next, right down there. And then the final one is at 231, which is the lows back here. But this looks like pretty solid support here as well. So now let's add some pivot points and see what they tell us. So I'll put in the standard pivot points, and I'll make this orange. So we've got a pivot. The pivot is way down here on FedEx. So remember this is using last month's data. So the pivot is way down here at 252, and we're already into the month. So we're already a little bit, not too much into the month. So there's the pivot. So the resistance. So the next support is at 245, not too far, but look at where this one is at 240. So support right there at 240, which is also where it also happens to be where I drew the Fibonacci, but it also happens to be a support line too. I could have drawn the support exactly where that is. So that looks like 242, 242 is where it's probably headed. Now let's add the pivot point for Fibonacci as well. Let's see what that tells us. And let's make it purple. No, make it pink. Yeah, so this one's down here. And support levels, there's 2 support levels before it gets to the 240 level. But it's already at one of them. It's already sitting right at this support level. So that's probably one reason it's bouncing. And it likely will continue to go down. So you notice how these lines here, this is last month's, how they are so close to these support and resistance. That's because February just began. So that's where we are right now. Actually, here's February. So these are the February numbers too. So resistance are about the same place. So it looks to me like 240 is where FedEx is headed to next. Anyway, that's how to use Fibonacci. One way, there's lots of different ways to use Fibonacci, and one way to use pivot points. Now, one thing I like to do with pivot points is because it gives you more room at the top in stock charts. Let me go create a new chart. Let's do AMD because it just reported today. So AMD is going to look terrible tomorrow. But if I look at the Keltner channels, and what I like to do is add pivot points to the Keltner channels because it will give you a little bit more space. And I just use the standard pivot points. So now you can see it actually, especially if it was one that was near the top. Let's pick one near the top. How about Google was near the top? Yeah, so this has the pivot points on it. So if I don't use the pivot points, if I take that back off, now you can see that the top Keltner channel is actually off the screen. So I can't really see where it is. But if I add the pivot points to it, even if I don't use them, it gives me a little more space. And now I can see the Keltner channels a little bit better. Just so happens that the first resistance level is at the same pivot point. Now we said that, what did we say? It was down about $10. So down to about 96. Actually, I can go back over here and do this again and look at the NASDAQ 100 and Google right here. Simple summary. So it's down 16 right now. It's down to 190. So if I look at Google right now at 190, it's right down here, right into the 2X channel. And it's below the first support level. So that implies that it could potentially fall down to the next support, which is down here at 180. Now, if I were to put Fibonacci level, at least one, I'll just do one on here, taking it from the bottom down here up to the top and hold down the control key, it gives me the 23 level. So now 190 is right about here at the 38 Fibonacci. That's probably where it probably will pause at least. It's also a clear support level down here. So that is probably where it's going to pause at this 38 Fibonacci level. And then the 50 is down here, and the next support is down here at roughly 180. So, but I think it's probably going down here to about 188. It's already at 190, so clearly it's going here tomorrow, 188. Then we have to see if it breaks through. And if it does, then it's probably going down here, which is in the 3X Keltner channel as well. And that's where it likely will bounce. We'll see. That's at 185, 183 roughly. So we'll see. We'll see what happens tomorrow. But that's the way to use Fibonacci's and the pivot points. And by the way, while I'm here, I noticed that the pivot point was not on my standard chart. So if I go back and look at AMD and click on the Keltner channels right here, you see the pivots are not on here. So I'm going to add pivot down here, pivot points. So now they are on there. And now I'm going to save this chart style, update an existing chart, which are the Keltner channels, the one I'm looking at now. Update that existing chart, and that's how easy it is. So now these will always be there. Every time I click on this button right here for Keltner channels, they will always be there. So that's the way you can do that. All right, thanks for watching. Hope that helped a little bit with stock charts, with understanding Fibonacci levels and pivots. And the market, I think, probably will head down again. We will be bouncing along that that key distribution level. So thanks for watching, and please like and subscribe and give me any comments or anything you want me to look at in the future. Thanks, everyone. Take care.